Good afternoon, folks. Welcome to the panel, Investment and Innovations in FinTech, hosted by Idea to IPO. We want to thank Idea to IPO for putting this together and for assembling a fantastic panel. My name is Stephen Colby, and I am an IP attorney. I'm a patent attorney with the firm of Rimon Law. We are an international firm with 45 offices in about 14 different countries. I'm going to start off by having every one of the panelists introduce themselves, starting with Michael. Go ahead. Thank you.
Hi, nice to be here. Mike Clark, I'm from Mastercard. I head up the digital transformation practice within the digital labs business. I also am a data futurist. I specifically look at the role of data across augmented worlds and looking at the future of value. So it's really nice to be here.
Gopi.
Hello, everyone. My name is Gopi Rangan. I'm the founder of Sure Ventures. Sure Ventures is a Silicon Valley-based venture capital firm I founded 4 years ago. My main focus for investments are pre-seed, seed stage startups in insurtech, fintech, and those areas. I invest in very, very early stages, usually the first round of institutional capital that founder raises. I'm very excited to invest in this space because the mission to enable peace of mind is very important. That's what drives all my decisions at the firm. I'm looking forward to discussing with you my perspectives on what I've learned in fintech and insurtech over the past few years. Thank you for the invitation.
All right. We are now on to, and I got to look past my camera, David.
Hi, I'm David Palmer. I'm the blockchain lead for Vodafone. I'm also a futurist and innovator. Very happy to be on this call today discussing innovation and ideas in fintech. Thank you.
Okay, and last but not least, Neelesh.
Hey everyone, I'm Neelesh, excited to be here. I'm currently an investor at Commerce Ventures, which is an early stage VC firm focused out in SF. And we focus on anything fintech, insurtech, and retail tech, pretty much commerce enablement, as the name suggests. And similar to Gopi, we focus on seed through Series B. But I'm excited to talk to everyone about fintech.
Great. So I usually start off these seminars with a question kind of defining the scope of the subject matter we're going to be talking about. Like, what is fintech? Financial technologies. Let's just make sure that we all understand we're not talking about shark fins, right? Does anybody here have an opinion on things that are included in fintech that really shouldn't be? And if you don't speak up, I'm going to call in Neelesh.
So the topics that I think are a little outside of fintech specifically, I think insurtech is just like a beast of its own. A lot of firms focus on fintech and insurtech together just because there is overlap. But I think it has a totally different, especially if like someone new to fintech, ton of different jargon, different way firms are established, different way they're capitalized. So I typically like to split them out, at least where I focus at Commerce Ventures, but obviously there's tons of overlap there.
David, any thoughts?
I probably agree with the insurtech side of it, but I actually would turn it around and believe that fintech will actually grow to encompass more and more capabilities.
Mm-hmm.
So I think it's not about what shouldn't be in there. I think it's about the things that will be added. Because as we move to embedded finance, it's going to be much more an API-based finance to embedded. There's going to be more and more capabilities that come under the umbrella. Okay,
so API-based finance is an example of something new that you think is going to come into fintech and be a big. My next question, just so you know, is going to be what do you think are the most important things in fintech? But first, let's finish this.
Okay.
Gopi.
Let's parse that out. Fintech essentially transforms how banking works. Insurtech transforms insurance. Banking is a very large portion of the GDP. It's about $4 trillion, according to a report published by Goldman Sachs a few years ago. This includes payments, lending, investment management, various other parts of banking. That industry has changed over the past few years thanks to fintech, and fintech itself has evolved over the past few years. There's a few $1 billion, $150–200 billion of venture capital funding that has gone into fintech. But fintech was not this big when it started. Like it was 15 years ago, it was a small portion of all venture capital, and a few VCs looked at fintech as one of their segments for focus. But now fintech has its own sector, and there are VC firms that focus just on fintech. And insurtech is a part of that today. But just like how fintech revolutionized banking, insurtech is revolutionizing the world of insurance. And the world of insurance, the GDP is about $5 trillion of gross written premium collected by insurance companies worldwide. And there's another $6 trillion of assets managed by insurance companies worldwide. So that makes it a very large portion of the GDP. And that's where the opportunity is for insurtech. So like Neelesh mentioned earlier, I think it's a beast in and of its own. Today, it's a subset of fintech, but I think it's going to be its own vertical, perhaps even bigger than fintech in the future.
All right, Michael, last. Tell us the
Yes.
future. You
Yes.
said you are a futurist, so I'm going to be asking future questions to you.
Yeah, well, that's what you get with the title, right? I probably agree with David as well to a degree. We're in a really interesting time. So a lot of technologies and even industries are combining and converging, just because of the very nature of how fintech has evolved. So fintech in the early days, and it's rightly been raised, was very much banking focused and very much focusing on how to either overtake the banks or become an enabler for the banks. I think what's been really interesting over the last 18 months, 24 months, if not longer, fintech now is starting to branch itself out and embed itself into other services, which is almost giving it more breadth and depth, particularly with things like bank as a service as well, where a lot of fintechs are now starting to play and evolve. I think one area which is probably not fintech, but you can definitely something happening in the future will be health tech, which is its own animal in its own right, given nature, the regulation and everything that goes with it. But eventually there will be a payment component as part of that. But I think for today, probably health tech does have a degree of separation in that space.
So can you give us some examples of moving beyond banking and things that might surprise our audience about where you think fintech is going to penetrate?
So I think I think the opportunities are in the adjacencies. So we've already seen in Europe and other places, firms like IKEA buying into banks or even investing in fintech to start bringing in financial services into their ecosystem. So almost to complete the end-to-end story of not just buying something in IKEA, but also having the financial component. Even Walmart and others are starting to embed finance into retail. So we are going beyond now. Fintech is becoming an enabler from an ecosystem economy, not just a vertical view. So it's really expanding the reach and where finance is expanding to, not just in verticals anymore.
Okay, great. Let's, so next series of questions, and we're going to loop back the other way. We'll start with Michael, is what do you think some of the hottest areas are right now in fintech? And what do you think, for you, what do you think will be the hottest area 12 months from now?
So we're very lucky. So in the team that I'm in, we've also got a ventures business. So we actually do go off and invest in businesses and look at the startups. And I do have a privilege to meet an awful lot of those. And we have a Start Path program as well. One of the big areas is data. So a lot of fintechs are rebadging themselves now as data organizations, because now the value is not just in the payment, it's what you add on top of the payment, which is very much the data. So definitely seeing, data analytics, but also helping organizations monetize their data, but also see the growth of, from a data perspective, as synthetic data, unreal data, even into the area of data ownership. So there's a lot of protocols in the Web3 space where people are able to now buy and sell data securely. So I think in the next 12 to 18 months, data will become a big hot topic for organizations, particularly as people start to own it more. We end up down that path. So I think data will be huge. I think it's been touched on already. I think insurtech is going to be massive in terms of the fintech beyond that space. That will creep into it. But I think very much data is one of those key things. And David, I'm sure, will talk about identity as another area, which is a real hot topic.
All right, David, we're going to go straight to you.
About data?
Oh, about what you think is the future, the hottest things now, and what do you expect to be hot in the future?
So for me, the sort of three principles or three things that excite me, which I think will be linked or are linked now to fintech. One of them is we're moving towards a world of wallets, and I believe now wallets are sort of discussed in Web3 and blockchain. That's all going to change. I think we're seeing with EIDAS in Europe and similar initiatives around the world. That wallets are actually being specified and standards and directions are being set by governments. So the world of wallets and fintech is a really interesting combination. And wallets working with fintech and Web3 finance, also very interesting. The other thing is identity. So where you can have a digital identity of a person, a thing, or a business, and you can start to incorporate that in fintech, incorporate that in embedded finance journeys. I think that is very, very exciting. And then last but not least, one of the platforms that we've developed in Vodafone that I'm an innovator or one of the founders of is Digital Asset Broker. And that is a platform for embedded finance in IoT devices, put simply. So fintech and IoT, 70 billion devices in 5 to 7 years, also really exciting. So I'll stop there. I could talk for maybe 30 minutes. So.
Yeah, no, that sounds pretty cool. And I'm just imagining you and Michael being in the same room together, at least virtually. It's like, okay, what does Vodafone and Mastercard want to talk about? And listen in on all of those things. Okay, Neelesh?
Yeah, so I think there's a couple aspects of fintech that excite me right now. One is lending and credit decisioning, providing access to capital, especially for a lot of underrepresented communities, is huge. And not only in the US, but even LATAM, where very few percentage of consumers have bank accounts or access to credit. There's a ton of startups that are now trying to change that. And basically, even if it's buying groceries, there's a lot of consumers that need simple cash to be able to do that. So that's something that's been an issue for decades, and I think will continue to be an area that we're going to see a ton of innovation. Another is basically like programmable money movement, or even just if you think about like UPI in India versus ACH here, there's a ton of companies that are now trying to change that, or trying to innovate in that space. And like we focus a ton on infrastructure, so we spend a ton of time here, but it's not direct to consumer, and as a consumer you might not see the direct effects of that, but from the background it's definitely something of interest. And then last is, as David mentioned, identity and fraud. We actually had a portion of our portfolio companies CEOs come to our offices in the summit and basically talked about fraud and identity. And after 10 minutes just discussing the different types of fraud, I don't think I've ever felt like more unsafe with my money. Yeah, and so there's so many types of fraud. As more money comes online, fraudsters are getting more and more sophisticated, and there's tons of avenues where you're susceptible to fraud. So I think that's going to continue to be a forefront of fintech, which I'm pretty excited about.
Okay, Gopi, you're last on this question.
The question is what's hot and what will be hot in the future. I actually don't think like that. I don't really chase these hot sectors. My main focus is on founders. I like to hear the story from the founder on what is exciting for them. Investors like me they are rarely predictors of the future. I don't really have a crystal ball to know where the world is going. In fact, if anybody has the ability to predict, it's the founders. So my focus on all my discussions is on the founder. Have they identified a solution that's underserved or unserved in the market? Why are they excited about those topics? There are many themes that come up, like embedded finance and creative solutions to go after segments of market that are poorly served, either in insurance or in the banking sectors. Those are the solutions that I look at. I also look at infrastructure for these companies. The early wave of innovation we saw was on distribution, marketing, how to get to consumers. But now we're beginning to see interesting solutions that actually modernize infrastructure for many of these legacy industries. And that's very interesting as well.
Okay, great. So we have briefly mentioned blockchain, right? Which is a part, but not necessarily a requirement of FinTech. So my next set of questions is going to be first, asking about the relationship between blockchain and FinTech, and then I'm going to follow up with some specific questions about blockchain today and last week or whatever your current crisis is. So how important is blockchain to FinTech, and which kinds of FinTech technologies do you see that are either attached to blockchain or wholly independent of it? All right, let's go to David.
Yeah, so I think it's a good question. So in the purest sense, FinTech existed and can exist without Web3 and blockchain, right? So, I think we've got a banking and card and payments infrastructure. And I think FinTech has succeeded in, bringing that forwards, developing services, APIs, and technology to make that something that is accessible and something that can be embedded and something that can grow and be executed by other financial solutions. However, what we have seen with Web3 and blockchain is different ways of transacting and different ways of payments and finance. So for example, tokens, right, and the ability to have peer-to-peer payments, is something that is interesting. It's an alternative way of transacting. You could transact before. Web3 has an alternative. It's supposed to be lower cost. It doesn't work out like that on layer 1, maybe layer 2s, you can get some efficiency, but things like cross-border transactions, etc. This sort of is very attractive. And then we've seen things like decentralized finance 1.0 and now decentralized finance 2.0, which are starting to converge, decentralized blockchain Web3-based finance, which is smart contract executed, with traditional finance methods, and that's pretty exciting because Web 2.0 starts to merge the two worlds. I think Web3 will bring a lot of excitement, a lot of new features to FinTech. But ultimately, FinTech I see as API and centralized. And then we've got this decentralized finance that needs to be delivered as a service. And maybe that's a challenge for incorporation, but incorporating Web3, but I think it will happen.
Okay. Neelesh, what do you think?
Yeah, I agree in large part with what David said, especially around peer-to-peer payments. I think another area there's two that come to mind that are pretty exciting. One is around ID verification. Obviously, with Immutable Ledger, you're able to, instead of having to log in and verify on each and every platform, you can have one instance in that sense. The other is around like financial management and holder of record. Similar to what's been going on, if you're holding all your assets on an exchange, it might be being lent to another platform, but as a holder of a wallet, you hold a private key, and if it's in cold storage, it's just with you. But a lot of it goes to being immutable ledger and being able to control your financial records. So I think those two are pretty interesting applications of blockchain and FinTech.
So do you think we're going to see little blue checks with recorded? Never mind, I didn't say that. Yeah. Okay, Michael, what do you think about the relationship between FinTech and blockchain? And
David knows I'll go way out there, so I'm going to rate myself in a bit.
Yeah, let's hear it.
So I look at what's happening now, like almost, David and I have talked about this many times, like the railroads of the 1800s. So we're putting down the infrastructure now, which is the railroads, effectively, which is all the protocols that we often see discussed in the media or online, the protocols that are going to allow cross-border payments, that allow us to have interoperability. And then once those layers are in place, then the trains will need to run on those tracks, which is the applications that actually will form and use that capability over time. And they will be your layer 2s, right? Those apps that run on top. And I think FinTech has an incredible role to play in providing access to that railroad infrastructure that are going to give us all the new capabilities and applications that we need as consumers to access those blockchain infrastructures. So FinTech has a massive role to play, as it does today in the Web 2 world, and in some respects has been a trailblazer for unbundling and rebundling what we know to be financial services, because that's really what's happened, is that large banks have unbundled their financial services, and fintechs have either taken those on as individual offerings or become rebundled back into a much leaner way of the way we look at finance. But when we look at blockchain, as David mentioned, and others have mentioned, there's a huge opportunity fintech to actually now give users a more better experience for accessing blockchain services, because today it's very early Web 2, so it's almost it's clunky, difficult for users to use when it comes to wallets. But fintech will figure that out, and we will get new ways to access wallets, and we'll get new ways to access services. So I think fintech has a huge role to play in allowing us to access those underlying infrastructures, as well as organizations who may become digital identity custodians, managing people's credentials and verifying them. So I think there's a role to play for everybody in the ecosystem, but I think fintech will be one of the leading blazers in terms of how we access and use the blockchain infrastructure.
Good, great. Did I cover everybody on that? Gopi, did
Go ahead. We can move to the next question.
you want to go for it? Yeah.
That's okay. Go ahead.
So let's focus a little bit on identification, because that's one of my favorites. I've done work on identification 10, 15 years ago, and it was pretty groundbreaking, multi-factor authentication and things like that. And I see more and more of that issue. I mean, Twitter, all jokes aside, is a good example of that. How do you identify properly somebody? Can we comment a little bit more about, is anybody seen something where they think it's, and I'm going to open this to everybody, has anybody seen anything where they think that there's been some really great strides made in identification, and seen some solutions, maybe a portfolio company?
Can we define identification, what it means?
Assuring that who somebody is. Is this really the person they pretend to be? Are they authorized to do this? Do you know who you're dealing with, right?
So let me take a broader view on that. Proving yourself with your identity on Twitter is one way, but I think what we are really addressing is KYC, AML. Can we confirm that you are actually who you are and you have access to and the rights to have this information?
Yeah.
So that is the broader level question, which applies to many types of entities, including banks and various other institutions. That is a very difficult problem to solve, and that's where I think the legacy solutions fail. They have been developed over long periods of time, and they've been battle tested in the market. So it is not to say that they are fundamentally flawed, but I think there are some shortfalls that we see in the existing infrastructure. And that's where we see the need for innovation. And can blockchain solve that, or can any other solution create an easier way for us to demonstrate identity, demonstrate verification much more easily in a more cost-effective way? So that's an area that I'm very, very interested in. For example, I invested in a company called Balkan ID. They focus on identity access governance. Who has access to data? What is the data that exists out in the world? And can we control that access to a point where we know that the right people have the right access to the right data, and we can put some timer on it if it needs to be controlled, or if we need to change those permissions, can we manage that? But the starting point of all of that is having a dashboard to know what exists and where is it. So that's the problem they're solving. The second and the third phases of that is how can we manage that more accurately at a granular level, and that needs to be solved. But we're starting in the first step, where we first need to know where is the data and who has access to that data.
Anybody else want to?
So yeah, there's a comment on
go Mike.
I was going to say, so there's a few two interesting things. So one of the early things emerging is the concept of data pods. So the BBC in the UK is just running a trial where all of users' data will be stored in a secure data pod that's owned by the user, no longer owned by the central organization. And that's following the Tim Berners-Lee model of Web 3.0. So there's a lot of companies now starting to explore this globally. That's one. I think when we think of identity, one thing we need to be mindful of as the metaverse itself evolves, because hey, we have to bring up that topic, I will have several versions of me. So how do I actually know it's me? Because I'm going to have about 7 different avatars, all referencing me with different identities in the physical and the digital world. And how am I going to actually know it's me and truly me? So there's been some great strides in identity post-quantum and so on. So post-quantum identity verification we've been working on and working with a few companies on from a cryptography perspective. So there's been huge strides already in even, I wouldn't say fintech, but I would almost say like the innovation space of how we're starting to think about identity, but identity owned by users, not by corporations. This is identity owned by users that can be traced and valuably given and sharing their data for a fixed period of time, which we can identify as them. But also then how do we know it's them in the physical world, but as they transition into digital as well, which is still a challenge to be solved. And there are companies emerging in this space, but I think we need to be mindful of that as we kind of move forward.
All right, David, you had something to say?
No, I was going to say that I believe that digital identity is the killer application of Web3. I really do believe it's one that hasn't got the adoption. I think Gopi's absolutely right that it hasn't lived up to the adoption speed that one would have expected given the benefits. But actually, we're now starting to see, as I mentioned, EIDAS in Europe and similar initiatives all around the world start to talk about, identity wallets. So we have in Europe the European Identity Wallet. And basically, where we look at the implementation of this in Web3, it's got the potential to revolutionize how we interact with things and really flip things from sort of having to prove who you are, so what we call the trustless customer experiences, to trusted ones, where essentially you have friction-free customer experiences which are based on trust and credentials and how it works. And I'm sure a lot of you may know this already, but you have essentially what you call a decentralized digital identity. So you have issuers who issue those identities who are trusted. You write those identities to the chain, and then you have verifiers who basically verify those credentials. Now, when you actually think of that from a practical point of view, if one of the issuers was the passport office, right, or the driver's license agency, and that credential is trusted, then essentially, if you look at going past border control, then your trusted travel credential can be verified, not having to transact the data, because if you combine it with what's called a zero knowledge proof, it's just a yes or no. Does David have a travel credential that's valid to travel from UK to US? Yes. So essentially, why do I need to carry a paper passport? Right, which is a relic from the dark ages that means nothing on the system, right? And why do I have to carry a physical driver's license? Because they're digital oriented anyway. So if you think about that from a practical point of view, this could change how we apply for mortgages, loans, how we rent cars, how we travel. And but it's a longer process to get the approvals, because you need states, you need the governments, you need banks, you need telcos, and these big trusted organizations to buy into it. But the process has started, and I believe when it comes to fruition, it will fundamentally change the burden of proof, in everyday life.
And just to quickly build on that from David's point there, the emergence of digital identity custodians will follow. So in essence, organizations will actually manage someone's identity for them and be that validator of someone's credentials. So, we've mentioned things like credit checks and things. In the future, you won't need to give all your data. All you will need to do is give a yes or a no, this person is valid for credit, without even showing your identity, because it will be verified by a trusted party.
And what I would add here is, like, the reason I love this space so much is just because, especially as everyone stated, there's a lot of different solutions, a lot of different issues, and a lot of it changes by geography. And what's really interesting is, like, a solution in India might not work in Africa, and Nigeria's solution might not work here in the US. And so, for example, in India, like PAN cards and Aadhaar cards, that if you're trying to verify to that, as soon as someone changes their address, it won't automatically update. In Nigeria, a lot of the government body, a lot of like the DMVs and the government related organizations have pictures of people's faces along with their IDs. And so you're able to do some like facial recognition or along with transactions to verify if that's someone. But in the US, you're not doing facial recognition on transactions all the time. So, a lot of solutions in different geographies are very different, especially with like fraudsters, or maybe doing more SIM card spoofing in India and Southeast Asia, but less here. So it's just super unique to me that there's tons of problems out there. Fraudsters are very, very sophisticated. And so you kind of have to focus on one narrow avenue and really tackle that. And then you also have the issue of like first party fraud. Like if I buy the $12,000 Taylor Swift tickets and I tell my credit card it wasn't me, right? Like I still bought the tickets, but how did they know it wasn't me? So there's tons of different issues in this space, which is super cool.
Yeah. I'm thinking of all the clients I'm working with that are in these different spaces, and the authentication, and as Neelesh just said, if it's authenticating a $800 pair of Nike sneakers, it's got to start with Nike, right? It's got to start at the beginning. And I've actually done work with the US Passport, and it is getting more. It is about a 10-year cycle, from we need to make improvements to we have it, and they are looking at including more biometrics in the passport. So you will see things in addition to just a authentication chip in coming years. So that's all coming, but it's not yet tied to something that you could use at the grocery store, right? So we'll see. David, you talked a little bit about trust and trustless. For the audience, could you give us a explanation of each of those terms? Because I think I've seen a lot of people confused about, well, if it's trustless, that actually can be good, right? You're right. I don't have to trust them. That's what it means. Or I have no trust in them. There's a different ways of looking at that.
Yeah, but I think you got to look at the resources, right, and the processes we have. Not everything, but a large proportion of what we do now is about validation and verification, and that's because we don't trust, right? So and quite rightly so. So it's are you who you are your credentials right? Is your employment history right? Is your financial profile right? So a lot of what we're doing, from going into a shop to applying for a loan to applying for a job to applying to study, to applying to travel, a large part of it is, you fill in this information and then prove it, and then we'll verify it. And if you just think from a resource point of view, forget the customers, but just from a resource point of view, what percentage of GDP resources are actually going into that, right? And when you actually look at it, you've got a hybrid of two worlds, right? So you've got this world, which is based on the Industrial Revolution, which was paper and file based, where you had a physical piece of paper or a physical document to prove. Right. And then we've also got digital proofs, and then we've got biometrics. So we've got a hybrid of all of this because we're in a process of transition. But that is essentially the proofs that fit into these trustless processes, right? Where everything is about proving who you are. And it consumes a lot of resources, and it's not very efficient. Going to trusted basically means that verification can be automated. It can be pre-authorized. And you remove the friction. Now, how you do that, I think, I agree with Neelesh. It doesn't work for everyone. It's, you've got to pick some use cases and some areas of focus. But the potential of it is huge, because if you look at the resources that are in verification, checking, security, which is part of the trustless world, it's pretty significant. So it has the potential to really bring efficiencies. But I still agree with you, Stephen, that is that there is a time lag to get it done. Okay,
I'm going to move a little bit to the side here and talk about cryptocurrency for a minute, because a lot of what the consumer thinks of as FinTech is blockchain and Bitcoin and Ethereum and so on. So I already asked a question about how related is blockchain is necessary for FinTech and so on. So my question is going to be, do you think that the volatility and issues related to cryptocurrencies is giving FinTech overall a bad name? And I'll start with Gopi.
Volatility by itself is not a bad thing. Risk in itself is not a bad thing. We need to look at the reasons behind that. And when we look at peel the layers to look at the causes for that, that's what bothers me. Volatility happening because of hype and people who don't really understand, they just want to jump into it without much intention to stay for the long term. When volatility happens, it removes those people out, and that's a good thing for the market. It corrects the process so that we focus on the long term. We build infrastructure. We bring more true believers. People who came in as a tourist, they are going to be weeded out. Occasionally, when the market corrects, those changes are good for overall progress in the long term. When volatility happens because of fraud, when volatility happens because there's some unfairness that a small group of people took advantage of, those are bothersome, because we need to find a way to inherently prevent such problems from occurring. And if we don't, then regulation is going to step in. If we look at the nature of problems that we've encountered in FinTech so far, there are all kinds of issues that we have seen, including some that are good problems to have and some that are bad problems to have. So the question in my mind is, how are we going to prevent the bad problems so that we can, some correction is good, some risk is good, and can we continue to make progress by making sure that we're moving in the right direction? That's the question on my mind.
All right. Anybody else have comments on that?
I think we can't have this discussion without raising the three letters of FTX and what happened last week, which for one of the biggest centralized exchanges is absolutely massive, and a lot of people are going to lose money that they've invested, and there will be calls for regulation, and it has not done the reputation of crypto or blockchain very, very much good. But I think there's two sides to this, and I agree completely with what Gopi say. I think one side is that blockchain and Web3 and cryptocurrency are not the same thing. And it's interesting that FTX was actually a centralized exchange. It wasn't a decentralized exchange. It was a centralized exchange. And certainly the US branch was subject to some regulation. But I think the wider question is, will the perception and the trust, in cryptocurrencies increase where you don't have policy? So why people trust putting money in a bank is not because the bank has all of the money in there, to meet all the deposit. They don't, right? They have a small fraction of it. But the government has a policy, and there are regulations and means where people will be protected. And we saw in 2008 that governments, where necessary, would bail banks out, right? Where there's an external shock. That doesn't extend to crypto. So we don't have policies. We don't have the same level of maturity. Macroeconomic policy does not extend to crypto exchanges, certainly not decentralized ones. So that level of immaturity will cause people to or consumers to have a little bit of risk and apprehension. A lot of people have made money. A lot of people are going to lose money given the current bear market. Will cryptocurrencies die? I don't think so. Will the market pick back up again? Probably. But will we have regulation, and will policy need to extend to cover Web3 and crypto and metaverse? Absolutely.
Okay, so yeah. Any other comments before I move? Because I have a question that leads straight from that.
Well, I just add to what David said. I think everything points to the consumer in terms of, do they trust this space enough to want to engage it? And that comes down to organizations who enter this space having a meaningful proposition. There's around about 1,500 plus tokens on exchange at the moment. If you're starting life, why do you need to create a token? unless there's a meaningful utility for that token that warrants you creating one, there should be no need for you to do so. So I think, organizations entering this space have to have clear clarity on the problem they're addressing and a long-term vision and a roadmap that consumers can buy into. I think only with policy wrapped around this will we get the traction of trust, which ultimately all comes back to, we can have all of these conversations as technologists and innovators and investors, but ultimately it comes down to the man and woman in the street that's going to pick up the app and feel like they can use it. And I think, that's as a community and a collective, that's what our aim should be, is to build that confidence and trust that people will use these, because they're not going to go away. I think they will become a cornerstone of how we will operate now and in the future, but it's going to take time.
Do any of you see cooperation between governments in this area? And we're talking about regulation, and we're talking about something that is inherently cross-border. There have been some attempts by some countries to prevent use of crypto, but David?
Yeah, I mean, you've seen with the FATF a few years ago that there has been some direction given on this. The governments are following, and it's a difficult one because decentralization can lead to innovation, and we've seen that it's leading to new products like DeFi and smart contract finance, etc. But there are going to be risks, right? It's a very immature space. DeFi is what, 4 years old. Cryptocurrency under 15 years old, and that is essentially alongside a banking and financial system which is very, very mature, which also had problems in 2008. I mean, will governments need to cooperate on this? I think absolutely. Do they need a framework? Does this need to be part of policy? Absolutely. But the level and right sizing of that intervention and that collaboration needs to be right, else you'll kill the benefits of crypto and decentralization.
We've had a little discussion about how the consumers view crypto. There's also business. I mean, do you consider overall, first of all, FinTech to be more of a business to business potential, or do you all view it as something that's really going to be mostly consumer facing? Anybody want to answer?
I think it'll be a combination of both. Business to business itself is not an end. The reason why businesses exist is that they want to serve people. So ultimately, it's all focused on the individuals and families. Business to business is the infrastructure which is necessary to serve consumers in the end. I think all of these will need to be solved. The number of problems and the intensity of those problems have not gone away just because crypto has some issues that we've identified recently. Do we trust each other to do business? We don't. Fundamentally, two strangers don't really trust each other. So we need an independent third party to facilitate that conversation, and the trade needs to happen. Today, we rely on infrastructure created by the third-party entities that facilitate these trust mechanisms. Can we replicate that using a decentralized system? That was the question that crypto attempted to solve. That problem is still there. We still don't trust each other. It's not like magically all human beings learn to trust each other, and we have developed antennas to know who the other person is. We need a source to trust each other. A lot of the infrastructure was built for the top 200-300 million people in the world, and we're trying to repurpose that system to apply for the next 500 million people in the world, and it's not going to work. The Equifax of the world and all these credit systems that were created to serve the top 100 million people in the world is not going to scale well when we attempt to build solutions for the next billion people in the world. So we need a different solution, and that will uncover a lot of possibilities, like under $1 economy, under a $10 economy. That has been completely blocked because for me to send $10 to any one of you, it costs $10 to process that transaction. It just doesn't make sense. The fixed cost of the existing systems prevent us to unlock economies that are possible under certain limits, like $1, $10. We need new systems. that problem is not being solved just because we've had issues with crypto recently. And the list like that goes on for a lot. There are many problems that need to be addressed. The question of fraud exists in all systems, and it will exist in the crypto systems as well. How do we mitigate that? How do we prevent that? How do we inherently build systems that take care of that? And will governments get involved in it? Maybe they will. Countries exist to serve their citizens and protect their countries from any adverse effects from problems created by other countries. They're inherently kind of selfish, and that's how it should be. That's how they are. Countries are. Will some countries behave more proactive towards adventure like this versus some others who would be more conservative? Possible. And so I think we will begin to see some changes in regulation, government getting involved. We will see some more favorable solutions for adventurous ideas, and we will also see some countries that are more conservative. Europe has taken a more conservative stand, and in some ways it's the right thing to do. And they have led the world for the rest of the countries to establish the right regulations to take care of their citizens. So we'll begin to see different flavors of that, and I think we're barely scratching the surface today. We're going to see many more changes come in the future.
Good. So anybody else comments on the same lines?
I think just in addition to that, I agree a lot with what Gopi said, but like you mentioned, a lot of what FinTech is aiming to solve is for the end consumer. And so solving issues between B2B, yes, there's plenty of avenues or basically there's plenty of TAM in that space. But I think what's super interesting is on the topic of trust, where I think we'll see a ton of startups, especially at the early stages, target consumers, but through bank distributions or other partner distribution platforms. And that adds a layer of trust, right? If I'm getting a solution directly from my bank, take Zelle, for example, payment remittance or P2P platform, at first, yeah, Zelle's through my bank account. I see it in Chase. I'm probably going to use that versus a brand new P2P platform that I've never heard of. And so I think that layer of trust through basically B2B2C could be a pretty interesting avenue for startups coming up.
Yeah. Okay. So somebody earlier mentioned economics. And so I'm going to ask a question about how you think FinTech is going to affect macroeconomics on the countrywide scale at the Federal Reserve. I see it as in some countries like micropayments or microcredit, it could have a huge difference across the population. Do any of you have an opinion on how FinTech may make dramatic changes in macroeconomics in the future?
I think we're seeing some huge projections for sort of payments and FinTechs and disruption to payments businesses and what that will be worth. I think we also, when we talk about macroeconomic landscapes of the future, can't ignore the metaverse. And of course, in the metaverse, 20, 38 years time, we're looking at a 5 trillion opportunity. I mean, obviously, I think Michael hit at this, is that, in the metaverse, I'm going to go 8 years in the future. You'll have several identities, you'll have several ecosystems that you're part of, and you'll need to make different types of payments, with different dynamics and different types of interactions, and you'll need to carry value right across that. So that in itself is going to represent a huge opportunity and affect the macroeconomic environment. If we drill it down to now, I think that when we extend the sort of macroeconomics to IoT, where we extend it to Web3, and where we extend it even to where we are now on the metaverse. I mean, clearly, again, I just repeat the same point, is that even if you look at how inflation is measured now, it's based on a basket of goods and currencies from the mid-19th century, right, with a very small update. It doesn't take into account fully digital and this whole new dimension of finance and transactions that we have, and different actors and different identities. So clearly, I think it's a must that macroeconomic policy and measurement is extended to these new landscapes like the metaverse and Web3. And I also think that it's a must that that the policy also extends, because as we've seen with FTX, which was ironically centralized, but you will have decentralized exchanges and other mediums operating on the metaverse. You know, if macroeconomic doesn't extend there, then you have problems. So that's my view. I don't know. I'll leave it to the rest of the panel to comment.
Yeah, I think I'd just to add, I think one thing that's the elephant in the room, I think, is the meaning of value. So is the meaning of what value is as the years progress, will that change? So to give you an idea, the data economy is predicted to be about $3 trillion by 2030. In Europe alone, it's pegged at about $550 billion by 2025. So the role of data as a means of value, your reputation as a means of value, even your values themselves will be exchanged in these environments. So fintechs will become enablers of new forms of value exchange, which is really going to rethink macroeconomics, what we know to be value and what are values. Like Mark Carney wrote an amazing book on value and how value is going to change through the years and what we think about value, particularly in the world of ESG, and what people are now starting to think about and how they choose to buy things. I think fintech will be an enabler of maybe a new form of macroeconomics or even a new way we think about value, particularly what David mentioned with the metaverse and Web3. New policies are formed, new ways of thinking. You know, our regulators are struggling to keep up with the exponential growth of technology and the exponential growth of change. So clearly there's going to be a breaking point at some juncture where we need to sort of review things and get a sense of things. But I think fintech will definitely be one of the headwinds of change. I think there's also other macro forces that will probably drive things. But I think, you know, what we know to be value is the elephant in the room. And I think that will change through the years, and that will have a profound effect in terms of macro headwinds.
Right. So I've got just a few questions. We are going to talk at the panel for about 8 more minutes, and then we're going to move to audience questions. And when we move to audience questions, I will start by looking at the Q&A tab. So if you have questions you would like to direct at any of the panel members, please point them to, please add them to the Q&A tab. And so some of my last questions. So I do probably a fair amount of what would be called fintech clients. And I get really excited when I see a new strategy for monetizing medical data using a blockchain or something. I have a client that is generating tokens based on the career of MMA fighters, right? And the fighters get to sell a bit of their future earnings, you know, all kinds of cool stuff. I've got fintech companies that are doing inventory financing. So just in time inventory literally at your door when you accept it, right? And opportunities for different ways of financing things and creating efficiencies in the market. So either creating new efficiencies or making something fungible that wasn't previously fungible. My question is, what are the best utilities? What are the best applications each of you have seen in the fintech space where you look at something and go, oh, wow, this really creates value. This is something that we didn't have before and people ought to want this. All right, Neelesh, let's see what you got.
Yeah, so I have a slightly different take on this. So we've been spending a ton of time with DEI initiatives. And so I think one of the—
define DEI?
Sorry, yeah, diversity, equity, and inclusion. And so it's basically focused on founders of underrepresented backgrounds or missions of startups that focus on financial inclusion. And so a really cool company that we've been partnering with and working with is Mocafy. And they basically help government distributed funds basically to cities and municipalities during times of COVID when people couldn't pay rent, or if there was a flood, government distributed funds and getting them in the hands of consumers without bank accounts. And it's really hard because traditionally you would have to wait in the mail for basically a check. What do you do with a check if you don't have a bank account or if you have nowhere to go cash that check? And so they're able to get a ton of these municipality funds and government funds directly in the hands of consumers through a mobile application. And they're working with cities and government officials to make sure that people are able to stay in their homes, buy food, pay rent, And so it sounds like a simple concept of basically just getting money in the hands of people that need it. But we've seen some pretty big impacts, especially with the communities they're working with. And I think it's a pretty innovative solution that we like to focus on.
All right, Michael.
It's really interesting. I think I go back to the inclusion as well. So I had the privilege of working for a large building society in the UK, which is probably one of the biggest. And financial inclusion is still an incredible issue, particularly when we think about the world that we're about to enter. And there's still about 3 billion people that don't have access to a smartphone. So
Out of the 8 billion.
Yeah, it's probably more, right? So how do we solve that problem and get financial inclusion? I think one of probably the biggest innovations, and it's not necessarily new, but it still has legs, is financial wellness and education. I think, the ability to help guide people in how they spend their money, but educate them on what financial terms mean, are incredibly significant. And I think, there's a lot of innovation that also happens under the hood that people don't see, but I think it's the stuff that people do see and guide them, particularly in terms of the world that we're entering in the economy. I think those financial wellness applications are very underrated and evolving very quickly to become much more personal, using AI to budget for people, taking the heavy lifting off them, and basically helping and guide them through difficult times.
Okay, Gopi.
Entrepreneurship as a career choice is becoming more and more popular. Previously, entrepreneurship was only for the mavericks and the weirdos who didn't really fit well in the society. That has changed. Now more people, especially students coming out of college, they want to start their own businesses. They want to own their future. So that is really going to change the landscape of how we view startups, how we view businesses. There will be new types of businesses started by new types of people. And that will mean that we need new types of investors, and that will naturally kind of lead into the DEI initiatives that a lot of us talked about. For this reason, I started a podcast 2 years ago, because a lot of the new entrepreneurs don't have an existing relationships with venture capital investors. So how can you learn about venture capital? How can you can I demystify the process that happens when an investor decides to back entrepreneurs? Can entrepreneurs learn from that experience so that they can be better prepared in their fundraising process? So I started a podcast 2 years ago, and my hope is to encourage entrepreneurs of diverse backgrounds to go out and start companies so they can learn from stories that other VCs have shared on my podcast. So take a listen to my podcast.
What is the name of the podcast?
I'll put a link in the chat. Take a look at it.
Great.
Yes. I've interviewed more than 100 VCs on the podcast so far, and it's a treasure trove of resources for new founders to learn how venture capital works.
Great. David.
Yeah, some of you consider weirdos and enjoy being a weirdo. Yeah, continue being weirdos. Like, no problem at all. Yes.
So for me, I think it goes back to the customer experience of making it easier. So I don't know if it's fintech, but I love Apple Pay and Google Pay, right? I absolutely love the fact that I don't have to enter my all these details. I can just double click, look at my phone and buy something online. And in fact, I look for websites, I look for shops that take it now. It's there was an article, and Michael won't mind this, sort of saying that this Apple Pay's overtaken Mastercard in payments. It's not true, because Apple Pay, the back rails are still Mastercard, and Mastercard's still huge. But it does show that the sort of significant progress and adoption that this sort of payment has had. And even in terms of topping up your cards and some of the APIs that can be used to do that, with some of the what we call the challenger banks are really exciting. But yeah, I find that brilliant from a personal experience point of view.
I think one more to give you as well, which I've just remembered, which is probably a guide rail for the rest of the world, is WeChat. So basically the birth of the super app. So that effectively gave everything in your hand in one place, and suddenly the phone truly became a platform. And I think that's a model the rest of the world is envious of, and trying to incorporate elements into their propositions in terms of that super app concept. So I think that's quite game changing in terms of the thinking and how that's evolved over time.
Okay, anybody else? I've got 2 more questions. So second to last is FinTech in the metaverse. We've mentioned it a few times now, right? I spent a lot of time in Silicon Valley. Actually, my most recent office was literally surrounded by Facebook buildings in Menlo Park. So do any of you want to comment on the impact of the metaverse along with FinTech?
Can someone first describe to me what is metaverse? There's like so much gobbledygook on this. I'm not really sure what metaverse really means.
Do you remember Second Life 20 years ago?
That was the early version of that.
Yeah.
I had an avatar on Second Life. Yeah, but I think there's more to it than just Second Life 2.0. I'm
Yeah,
still trying to
agreed.
understand.
Agree. So I look at it this way very simply, and I'm glad you raised it, because a lot of the things that we see as the metaverse today are quite frankly VR use cases. They're just a virtual reality use case. The metaverse is an integrated set of experiences. We are many years off what we know to be the true metaverse, because we still haven't solved interoperability, portability, all of these things that will connect universes together. So I look at the metaverse as a connected set of experiences across virtual and physical worlds. But today it's just a set of VR use cases around virtual reality. So, like telemedicine, all these things are VR use cases to a degree.
So is this metaverse? We're not in the same room, but we're all together.
Not quite. Not quite.
It's got to be a little more than that. But anybody else? I have one final question. It's the prediction question, where I ask you to predict 10 years into the future. And Michael will be the last, because he's probably got the wildest story. Okay. Neelesh, what do you got?
Yeah, so
This will
I've
be
only-
recorded, and we will come back and visit this, just so you know.
my experience in FinTech has spanned maybe 5 or 6 years now, so not nearly as long as enough to see what the previous generations of FinTech solutions have been. But my goal in the next 10, 20 years of FinTech is that we really tackle the issues of like predatory loans or problems that a lot of underrepresented communities are facing. And so it sounds like a simple issue, but it's actually a widespread one where consumers with low income or low access to credit now have to pay super high interest rates to basically get capital. And there are plenty of Web3 solutions for that haven't come fully to fruition. But my goal is that over long term, things like that are solved in a similar realm, basically going along the lines of DEI initiatives in the venture community, ideally bridge the gap that founders of underrepresented backgrounds are able to raise similar amounts of money or with the same ease as typical founders that have historically raised capital. So a little more high level than maybe what the question was intended for, but those are some areas that I hope, 10, 20 years down the line, ideally faster, but those aren't issues in the future.
All right, David.
Yeah, not an easy question. 10 years in the future.
If I asked you this question 10 years ago, what would?
Yeah, no, 10 years in the future, I think we will have less cash. I think the move to digital finance would almost be completed. I think money will be intelligent. I think we'll have central bank digital currencies in existence. I think wallets will be commonplace for every person, organization, household, even governments. I think those wallets will allow you to intelligently access and prove your financial credentials. I believe we will move to an economy of tokens, or a token economy. I believe that there will also be some element of digital barter there. By digital barter, I mean organizations able to pay, so a Vodafone paying for accommodation with a Vodafone token, and WeWork paying for connectivity with a WeWork token. I believe there'll be some of that. And I believe that Web3 and the proliferation of cryptocurrencies and blockchain technologies will be much more widely used and adopted, at least the blockchain side of it, adopted by banks and existing financial institutions who would have begun to reinvent themselves. I'll stop there.
All right. Gopi.
10 years from now, would like to know that war is obsolete. We don't need to fight and kill each other to resolve our disagreements. 10 years from now, I hope that every person that has an idea to start a company has access to the right resources, including capital, without having to fight through biases and unfairness. And I would like to see the possibility that in 10 years that we can actually live the life we want without having to destroy the planet.
Okay, I like that one. The sun has come out on my forehead. Okay. Finally, Michael, and then we'll go to audience questions.
Okay. So I instantly just done a piece of work on this. So, so for me, the interesting thing is that I think data will become a currency in 10 years' time. I think we will question what is value, and we will also question what ownership means in 10 years' time. In 10 years' time, we'll also have 6G networks, which means that we will have near-field positioning systems, electricity grids built from the ground up using AI. And eventually we'll be able to have distributed data and solve the data storage problem that we're about to enter. So new forms of data compression. Organizations would have shifted to become data trusts, where they're actually looking after consumers' data for them like a portfolio. And also identity custodians will become common. So where people will be managing their credentials on their behalf. And possibly in 10 years' time, community may become more powerful than equity. So we will be fully embracing a creator economy in 10 years' time. And no longer will companies be extracting value. There'll be actually vast amounts of creation for consumers and amongst consumers as their data is owned and shared. And data eventually will move away from central companies. This probably be longer than 10 years, but I think there'll be early phases of it with Gaia X in Europe and other initiatives with digital identity wallets with PSD3 and others. We'll put data back into the hands of consumers and it will become its own asset class in 10 years' time.
I think some of that is already here.
Yeah, it's happening. The signals are here.
Yeah, no, I see, like, I have AI companies who are realizing that they can take their medical data and package it. And it's got more value than everything else. So yeah, that's certainly true. Okay, I'm now going to click on the Q&A tab and go through the questions that are here. And the first question is regarding NST's new quantum encryption challenges. And that is a question for actually a different panel, because I see that in 10 years, decryption is going to be so fast that we're going to, this is going to be a new issue. But it'll, I want to be the first guy who invents that quantum computer that can decrypt anything. Anyway, does anybody have any comments on encryption technologies?
I'll just say that quantum is coming. It affects elliptic curve and RSA cryptography, which are sort of core to blockchain. But there are some quantum proof. So you've got lattice-based, code-based cryptography, which are solutions to this. But they cost more, right? And there needs to be a lot of investment, a lot of transition. So I think quantum is definitely a threat to Web3 and some blockchain technologies that haven't begun the race to quantum proof, but it's also an opportunity.
The next question is from Howard, who is wondering why he gets so many emails. And that's because a lot of organizations share and help distribute each other's announcements about events. So I get the same thing. I get plenty of notices about a particular event. I might get it from 3 or 4 different sources because I attend an awful lot of events and go either in person or online. And yeah, my trick is I have everything go to one directory. Okay, it automatically gets filed away for me, so it doesn't pollute like
let's take that question.
Problem.
Like it's an interesting question. I understand the frustration with which he may have written the question, but what the underlying reason behind that is that the inbox is sacred. Inbox is your home, and how dare you like knock at my door and enter my living room? That's the kind of nature of this question. And the reason why that happens is that we don't have a better solution. I'm glad that the inbox exists, and I'm glad that Rob reached out and asked if I could speak on this panel. We hadn't talked in more than 2 years. The last time I did this was pre-pandemic in person. He entered my living room and he asked me the question, and I'm glad he did. That's why we're here today. Sometimes we don't want people to enter the living room and ask questions randomly. We don't want random strangers walking into our living room. I don't know how to solve that problem, but I hope that there are entrepreneurs who can build solutions, who can help us manage this inbox, because I don't think this inbox is going to go away. Email is not going to go obsolete anytime soon. That's how it looks like. Maybe Facebook will go obsolete and people aren't using Facebook as much as they did. And there are other solutions like that. But email, I think, is still sacred. And we need some creative solutions to help us manage. The tips and tricks that Steve, you mentioned is great, but I think we need an even better solution on what we're waiting for. Like, what would we welcome into our living room?
Yeah, I have somebody I know who's a friend who actually gives lectures on managing your inbox. I mean, that's what she does for business. And it is pretty ground shaking when all of a sudden it goes to zero. It's like, I've organized everything, right? So I agree. Okay, the next question is about financial literacy. Financial literacy for the masses has been a big topic over the years, but what about those setting the strategy for economics? Do you think regulators, central banks also need to learn big time on new financial technologies?
I think it's a bit of both. I think on the inclusion question, I think historically, financial firms have been guilty of just exposing their product catalog to customers rather than actually explaining it in terms, like, for example, no one goes to a bank for a mortgage. They're going there because they're moving home. So there's this language translation that needs to take place from the customer experience standpoint in terms of understanding what people are trying to do and then matching that with financial offerings rather than lazily just exposing your product catalog. I'm not saying all banks do that, but there are examples out there which are incredibly complicated to understand for the consumer. And then when it comes to financial technology or technology in general, absolutely. I think in the future, legal representation is also going to have to understand technology. I think there was a great quote that a large proportion of people in the Senate in the US are lawyers, and in Japan or China, the large percentage are engineers. So you end up with this different discrepancy of understanding of technology. And I think the biggest challenge, and I feel for regulators completely, is we've left the period of linear growth and now we live in the world of exponential growth. So keeping pace with understanding of technology, but also the impacts when they go wrong. Fixing fiat is easy because we created it many years ago and we know how to solve that problem, albeit not in a great way, but we know how to solve the problem. When it comes to technology, if Google fell over, I'm not quite sure a government in the world would know how to put it back together again. So as technology becomes more pervasive, somehow our regulators have to become more aware of, one, the impact of mergers and acquisitions when it comes to technology, but also the role of technology and what it means and how we govern it and how it should be used. Just because it's there doesn't mean sometimes we should use it. And I think these are some of the things that regulators need to get understanding, and that comes with the technology community to help them, but also, for new things, a better understanding of what they mean. And I think that's one of the big elephants in the room, particularly as technology keeps on accelerating at the rate that it is.
Great answer. All right, we have one more from Mitch. Why is there no risk management in the entrepreneurial VC or FinTech ecosystem? Anybody want to take that? Take a chance?
I assume this is somewhat related to FTX, but I think for me, what the fallout from that will result in, I think you're going to have a lot more VCs and regulatory bodies that are going to require early stage companies to at least have a board or at least some oversight on the company. I saw online there was a couple comparisons between FTX and Theranos, and at least Theranos had an independent board, albeit that it was still left in the dark. But I think FTX without a board, without a CFO, I think things of that nature are likely going to change in the near future. You're going to see at least a lot of early stage investors and growth stage investors focus on some sort of risk management. To be honest, there has been tons of areas in FinTech, at least, where there has been fraud and hasn't been caught. But I think the basics, at least from the VC level, are going to be to focus on at least like board level observation moving forward.
All right. Okay, if that's it, and I don't see any other questions, I'm going to just go around. Does anybody have any final thing they want to say before I close down the panel?
Listen to my podcast.
Yeah, yeah, it's up on my screen. Yeah. So. It's always great to meet a new group of investors, and Rob is pretty good at finding new people every time, and people who are actually in the right field, right? So I want to thank you all for coming, and I want to thank all of our attendees. It's been a pleasure. Please look out for those dozens of emails that you're going to get for Rob's next event. He does an awful lot of them. I haven't counted, but it's a definite part of my inbox. So thank you very much. And that
Stephen, Rob's asking the question, how can people contact the panelists?
Oh, yes. Thanks, Rob. All right. Could each of you put in the chat your most favorite way of being contacted, whether that's email or LinkedIn or whatever?
LinkedIn for me. So.
Okay. So if it's email, put the email. Yeah, thank you. All right, great. The same for me. Sorry. There you go. All right, folks. Thank you very much. I'm going to stop the recording. I'm going to give everybody a minute to write those things down. I'm going to wait about 30 seconds before I close the event, but thank you very much.
Thank you.
Thank you.
Thank you.
Bye-bye.